Welcome to Football and Finance, Winning the Wealth Game, powered by River Rock Financial Group, with your host, Max Wiltz, where we connect the discipline of the gridiron with the strategies to build wealth. Let's get ready to tackle your financial future.
Hey, what's going on, everybody? It's Max from River Rock Financial Group, and I just want to say thank you for joining me for this presentation, seminar, webinar uh, about life insurance simplified, how to use term insurance to your benefit when you're alive and when the time comes for your loved ones to take care of those things that need to be taken care of. Life insurance, like I've said before, is about life. It's not about death. The word life shows that the benefits of life insurance far outweigh what most of us can understand about life insurance. A lot of us just think that it's about death, and it's really about a lot more than death. Okay, there are so many different things you can utilize it for, and that's what this presentation is about. And once again, my name is Max with River Rock Financial Group. And this presentation is about how to use term life insurance. So without further ado, let's go ahead and get started. All right. So what is term life insurance? Term life insurance is a product that lasts for anywhere from 10 to 40 years. So unlike whole life insurance, which lasts your whole life, term life insurance can last from a period of 10 years to 40 years. Just depends on your preference and your goals. Okay. What is the difference between term and whole? Well, term, the costs are usually lower. The face values can be as high as $1 million, 500,000. And whole life insurance, the premiums are usually higher, and the face amount can be up to $1 million or whatever. But you also receive a percentage of interest on your premium. So let's go back. So again, term insurance can last for a period of 10 to 40 years. All right. It's usually in increments of 10, 15, 20, 30, or 40. It just depends on two factors, your age and what you intend to do with it. So that's what this presentation is about. So again, term insurance is for a term period, a term of your life, 10 to 40 years. Okay. And the whole life, and it's cheaper than the premiums are lower than whole life. And because whole life is for your whole life, as long as you pay the premiums, the policy stays in force. That's for both of them. The main difference is in whole life, or what people call cash value or permanent life insurance, you receive a little bit of interest on your premiums over the years. All right. Okay. So term is usually less expensive than whole life because it only lasts for a specific term. All right. And also you receive a percentage of your money, a percentage of interest on your money with whole life. With term, you don't receive a percentage, but I'm going to get into how you can benefit from term insurance here in a second by using what's known as return of premium. Okay. So what are the four ways you can use term insurance beyond the death benefit? That means while you're alive. Okay. So return of premium, mortgage protection, income protection, and conversion to whole. Okay, so you can get all of your premiums back. So, for example, if you have a $500,000 term policy and your premiums are $200 a month, right? And your term policy is for 30 years, and you live past the 30 years. Well, the insurance company will give you all of your premium back. Now, you won't get any interest, but you'll get all of your premium back, which is a great deal, right? Because let's say, for example, the premiums over 200 years is, I don't know, $100,000. Well, at the end of that term, 30 years, you get all of your premium back, yeah, from the insurance company, right? but you don't get any interest on it. But you still get the return of your premiums back if you outlive the term of the policy. Okay. All right. So that's one way to benefit from term insurance. It's cheaper, return of premium, which is a rider, by the way. Okay. It's a little bit extra every month, but it pays for itself because you get it all back if you outlive the term. Okay. All right. Another way you can protect your mortgage. All right. So if your house is 500,000 and you get a policy for 500,000, which, I don't know, $200 a month, $300 a month. It just depends on your age and the time of the term, right? So most people's mortgage is 30 years. You get a 30-year term policy. You attach a return of premium rider. You outlive the policy and you get your return of premium back. I don't think there's a better deal than that. Okay, so mortgage protection. There are products specifically designed to protect your mortgage. If your home is 750,000 or $1 million and you want to get a policy just to be able to leave your loved ones with something and have a return of premium, if something happens to you, God forbid, there will be a $750,000 lump sum, $500,000 lump sum. You want to be able to have them to pay the mortgage for a certain period of time. You may not want to pay off the whole mortgage or give them enough money to go purchase another home, give them time to sell the home. Mortgage protection insurance is a great type of policy. Okay. And then income protection, disability income. This type of term policy allows you for a certain term, right, to have income protection based on your income, based on your current income, right? And so there's a few moving parts to it, but basically it guarantees that if something happens to you, you become disabled or whatever in whatever capacity, then your income will be steady from that policy, right? There is a waiting period, but it far outweighs the premium because you want to make sure if something happens to you and you become disabled in whatever capacity, your bills are paid and you have some money coming in the bank. It's basically a paycheck to you, all right? It's not like some other carriers. There is a carrier that does it's a supplemental insurance where you get cash to pay for medical bills. Income protection pays for mortgage, utilities, gas, groceries, and things like that, right? It basically guarantees a percentage of your income as a check, and you can add specific riders to it. All right, and then the last way you can benefit from term insurance is you can convert the term to whole. So here's the beauty of this whole presentation. You can have a term policy. I suggest at least $100,000, right? At least $100,000 term policy, which for some people may be between 30, 40, $50 a month based on your age and other factors, right? You can convert the term once your term is over. So let's say, for example, your term is 30 years and you get to the point where you're thinking about converting the whole or the term is about to run out. You say, hey, you call me up or you call the carrier and say, hey, I want to convert my policy to a whole life policy. Well, then what the carrier will do a calculation, and usually what they allow you to do is convert half of your policy to a whole life policy. So here's the beauty. Not only can you get your return of premium back, you can also use it to protect your mortgage. You can also use it to protect your income. You can also convert it to whole, right? So I said this presentation is not going to be long. Here's some frequently asked questions. What about medical? What about my health? Carriers have a lot of ways to deal with the plethora or the spectrum of medical conditions. I say do not be afraid to go ahead and apply for a term policy because usually carriers are a little bit more lenient with term policies. What's my premium going to be a month? Well, you don't know that because what we need to do is do an illustration and see everything that you have. You have a house, you have cars, you have children. You want to protect all that to a certain extent. Like I said, I suggest at least $100,000 term policy if that's the direction you want to go. And what is a carrier? So a carrier is a insurance company that basically utilizes people like myself or agencies like mine to go out and tell people the good news. Okay, so medical is not a barrier, right? There are some medical conditions that will not allow for, 500,000 or $1 million. I know I've seen a lot of ads about, $500,000 policy, $1 million policy. And the reality is, your age does play a factor. Of course, the younger you are, the longer the term they will allow. So, for example, if you're 30 years old or 35, maybe 40, there's some carriers that'll go all the way to 40-year term. So if you're 40, you can get a 40-year term policy that'll run to your 80, right? You attach a return of premium rider, then you're looking at a beautiful thing. Not only is your mortgage protected and your children are protected, but you also, when you get to 80, you hit 80, you about to hit 81, boom, you say, hey, Mr. Insurance Carrier, I want all my premium for 40 years back. You get all your premium back for 40 years, which is, I mean, I can't think of a better way to utilize life insurance. Of course, your premiums are going to be based on several factors, questions. Most carriers will do, depending on the amount. Once you get to a certain amount, they'll ask you to do what's known as a paramed, or some of them will call your doctor. They'll pull your medical information bureau and come up with, once you do the application, to come up with your real premium. Sometimes premiums quoted will go up or down based on those factors. If you got great health, sometimes they just call and ask them some questions, and sometimes they just go off your medical information bureau. And sometimes I've seen them not even call and ask questions. They just go ahead and submit the policy, or send you the policy. You sign off, and boom, you're off and running. You're covered. Your kids are covered. The mortgage is covered. And then, so carriers are a lot different depending on what they choose to do. All right, so thank you for that. Like I said, this was not going to be a long presentation. You can follow me on Instagram, Facebook, TikTok, or YouTube. You can hit the QR code for a free quote, no obligation. That free quote is going to lead you to several different carriers and several different options. It's going to automatically come to River Rock Financial Group to do the rest of the work. So until next time, again, this is Max from River Rock Financial Group. Do what's difficult while it's easy. Thank you, guys. Have a great Saturday. Enjoy the football games.
Thanks for listening to Football and Finance, Winning the Wealth Game, powered by River Rock Financial Group. Remember, every great play starts with a solid plan. Until next time, let's keep winning on and off the field.